And we are live. All right. What's going on, everybody? Welcome to Wolf. Welcome to another podcast. Good to see everybody here. Really excited to be chatting with George. He's the founder of Prospero AI. Looking to if you're looking to level up as an investor, and especially now with the market being as it has been a wild time to be alive, whether you're in stocks or crypto. And a lot of people have woken up and been like, I think I need to know more. I need to have better products. I need to have better places and resources that I can gain an edge, and that's probably the one of the biggest takeaways I've found in a lot of our market talk conversations is our traders especially are like, look, I'm not entering a trade unless I have an edge. I need to know what's going on. I need to have some kind of information that gives me some kind of indication of what direction this thing is going. Otherwise, I'm just pulling slots. And so a lot of our traders are excited about that. And so anyways, I'm really excited to welcome George to the podcast. George, welcome to the show.
Thanks for having me on, and that's great advice. Yeah, like one of the first things I always tell any retail investor, trader, anyone, it's just like you got to be honest with yourself. If you really have an edge, or you're following the crowd, and if you're a doctor and you're looking at biotech differently, or if you're selling cars and you're looking at car stocks, like I think all that's like super important, and it takes work. And I think it's great. A lot of the new people coming into, retail trading, retail investing. But I think the other side is like, there's a lot of people making it look too easy. So I think it's really important to be able to say like, okay, do I really have some kind of edge in this? That's a lasting way to have success.
Yeah, 1,000,000%. And the platform you guys have built is multifaceted, very cool product. If you could just give a bit of a background on yourself, and then maybe why you even decided to enter this arena and put out a platform and a product like this, and kind of go for the people and be like, let's see what we can do for the average folks. Like, let's see what we can really do in form of access that gets them to maybe get to a point where they don't need a financial advisor and they're paying like $20,000 a month. Like, I've seen some pretty crazy things, and I'm like, man, I feel like a little bit of research on your own, you could do this completely autonomously.
Oh yeah, definitely. I think that's a big philosophy in what we've done. I mean, I've been doing this forever, and a lot of what Prospero is are just like lessons I've learned. Like I started making my first investments 25 years ago when I was 13.
Wow.
And
what
I was
were
actually
those investments? Do you remember?
Oh yeah, of course I remember. I invested in E-Trade, which did very well.
Wow.
And Gemstar. E-Trade did very well and then terribly. And Gemstar was this like VCR like company. And like I learned my first, my uncle's in the hedge fund world, and I learned my first important lesson that some people take a lot longer to learn. I was in Gemstar. It started to go down, and I go to him, and I was like, "When are we getting out of Gemstar?" And he was like, "Oh, like I sold that months ago." And I was like, "What? Hey, how can you not tell me? You knew I bought that." And he was like, "There's your first lesson." Like, he's like,
Wow.
"You don't have any friends." He's like, "I love you. I care about you. But we don't have any friends in the stock market. Like you're on your own." Like, I would have loved to tell you it wasn't intentional. But I think that's always super important, that everybody, like anybody's like, "What's your target? Where is your exit?" Like when they ask that question, like you need to know that yourself. And if you don't, you're going to find some trouble eventually if you haven't already. But E-Trade, like I invested right around the tech bubble, and it's like that classic thing. Everyone around me was like making money. I was hearing the adults talk about it. I was like, hey, let me try this. And I had E-Trade, like I probably like 4x my investment before losing 70% of it. And yeah, I hassled, like I had saved some money, and like you needed your parents. I like hassled my parents until they let me invest. But yeah, that was the first, like those two were both very important lessons. Then I actually, continued to really want to do well in the markets. I worked at Columbia Business School when I was 16 for a pretty famous value investing professor, Bruce Greenwald. I like pounded the table to get that job versus an MBA student. And then the following summer, I worked at my first hedge fund. I taught myself accounting to get that job. And yeah, I was working at a value fund when I was 17. And that's on the value investing side is where I really started to understand how important Prospero was, because not only does value investing, in my estimation, miss stuff, especially, I think what doesn't get discussed enough in terms of value investing is like one of the reasons that Buffett or value investors do so well is that they're helping to manage the companies, especially Buffett, right? When Buffett takes a big position, right, he doesn't just do well because the company is like good or whatever. He does well because he's helping the company in strategies. He's opening doors for the company. So that part doesn't get discussed enough. I found some holes. And not only did I find some holes, I actually found that even on the value side, I worked for funds, that were even close to $1 billion. And even then I felt very disadvantaged versus the larger guys. And the necessity for something like that, just what I would call helped people understand like underlying market equations, became very relevant. And I did AI as a service for 8 years before I started Prospero to basically finance the platform that we could then offer for free, because I really cared about solving this problem. And along the way, I'd say what our secret sauce is I realized, when I was 25, I thought I could actually build an arbitrage machine and be literal Robin Hood. That's when I started my first AI company 14 years ago. I had not heard of Renaissance Technologies or Bridgewater. And when I found out that they existed, I pretty much was like, oh, I don't think I'm going to, not going to compete with them. Let's figure out a new plan. So one of the things I tried that ended up being like the really successful, underlying market equations that makes Prospero work so well, is I tried, instead of trying to predict stocks and prices, what I did was I tried to accurately tag and aggregate institutional options bets. And that's a lot of what makes Prospero successful. And when we first started out, our last project, we beat a global top 5 bank in predicting their entire corporate bond book. And we were using things like social media data and news data to, beat them by a substantial margin, because they weren't using those. And yeah, if you're trying to figure out like if a specific client is going to call about a specific bond, it probably helps to know what's in the news or what they're saying on social media. That was like 8 years ago. We were early to that. So we basically took all these concepts and we're just like, okay, by, helping people understand what's in the news or in social media or in the options markets, right? We could reduce the error rate. If nothing else, just be like, you don't want to be betting against, where institutions are kind of like amassing their capital in the options markets. And yeah, that's what we set out to do. And what I like to say is like, we've been rewarded, I think, for our attempts to do good. Because, on average, the last 4 years, our newsletter picks that we give away for free every Sunday are beating the market by about 67% annualized on average over those 4 years. So yeah, we did not set out to build trading signals. We set out to just help people reduce error rates. And they've turned into some really, really powerful signals that not only we could use. Like what I love to hear from Prospero users all the time is, some of them do better than us. They find trades that we don't see. They take more risk and have bigger rewards. We tend to be big risk managers, but that's the cool part about it, that, I layer in a lot of my expertise to get those very high returns, but it can be very simple to use for a lot of people too.
Yeah, and I'm pulling this up right now just because you had mentioned that, and I remembered there's a nice graphic of it on your sites, and I was like, let me pull this up real quick while you were talking about the newsletters. But you've got an investing newsletter and a trading newsletter. So, I mean, I think it's not like that hard to kind of extrapolate why you would maybe say, okay, education is going to be super important if I'm going to be looking out for like the average investor. It's going to be really important to be putting out content out there and putting out education, stuff like that. But you've gone with the newsletter route, and I think that's an awesome idea. I think Sam thinks it's a great idea. We're all big fans of newsletters, so it's a great way to get the word out there. But talk to us a little bit about the newsletters and what is offered, what's in them, and what kind of ways people can get involved with Prospero. Because like you said, it's a multifaceted platform and a place and a resource for you to gain and level up as an investor yourself. So what other ways can they get in? And maybe we can just start with the newsletters because they're right here. Yeah,
it's pretty funny. We started writing the investing letter for 2 reasons. One is, some skeptics said, if it worked, we wouldn't be giving it away for free. So that was one thing we were just like, okay, we can prove that this works. And then the other part was, especially in our last version, we're on V4 or V3 of the app. There could be a difficult learning curve. So we really just started the investing letter to just be like, here, we're taking the signals every week. And I would say the biggest difference, in talking about our products between the app and the investing letter is the app is giving you information at a faster rate on how to just pick stocks, compare stocks, follow your own portfolio. It's very useful for that. It updates every 3 minutes, whereas the investing letter is, twice a week. But what the investing letter is doing is it's teaching you how to take the signals and things like the market signals like SPY, QQQ, net option sentiment, which are, excellent signals too. I mean, especially this year, we've been way out in front of the market, especially the declines a few times just with that signal alone. Taking all that and teaching people how to form portfolios with it on a weekly basis. So that's the big thing in the letter. We see what's going on in different market caps, in different sectors, and we say like, okay, how do we use that to create a balanced portfolio out of what looks good in the signals? Because if you look in the app, a lot of the times you'll see, tech stocks, consumer cyclical stocks, healthcare, sometimes financials, I would say, but tech especially and communications, I would say are often the leaders because those are the big, stocks that everybody follows and everybody knows. But it's not exactly smart to just like load up your portfolio with a bunch of like momentum tech stocks, right? So that's why we say, okay, let's take these rankings, help people form portfolios. And the trading letter actually came out of the ideas that like some of our users that were traders just wanted more ideas. And, very interesting, like at similar performance levels, alpha picks by Seeking Alpha and our trading letter, alpha picks give you about 2 a month. And the trading newsletter gives you about 100 ideas a month. And it's similar aggregate performance. Wow. So that's us just being like, here is an automated take on all of our best ideas in a given day. We send it out every day. And that one, we don't really expect anyone to follow. We just are just like, take these ideas, figure out what you have confluence with. But, also you'll see our portfolio cycle through a lot quicker. So it kind of gives you an idea how you might rebalance it.
Gotcha. Okay, that makes a lot of sense. And I think that's probably good. Yeah, you don't want your entire portfolio full of growth and momentum stocks. Like you said, it can get pretty hairy there. Depending on the month that you check your portfolio, you might have a heart attack or you might go and buy a yacht. It's been pretty crazy watching and keeping up with all these things. I'm curious what kind of things customers and clients and people who have used the platform said about it. Like, what are the biggest things they pulled away from it and found the most benefits from and been like, this is really cool. This is like a main thing I tell my friends about.
Well, a lot of people use it in different ways. But the one thing that we just like get very consistently, because I guarantee it, is I tell people if they use it for a year and then basically just check your entries and exits, check the signals, check SPY and QQQ net option sentiment, you won't come back here and tell me that you haven't done better. You haven't improved with it. So that's a really important promise that we do get consistently from everybody. It helps you improve, right? Like anything, there are limitations if you use just that and don't use anything else. Like I just said, right? If you're just buying our picks every day, you might be exposing yourself to a lot of risk if you do that at the wrong time. But the really cool thing is like we have investors that use it. We have traders that use it. An interesting thing I think about how the investors that use it is they actually tend to use the short-term signals more because they'll do like an enhanced dollar cost averaging where they'll say, like instead of just buying the same amount of all my portfolio, I'm actually going to tilt it more towards stocks that have higher net option sentiment or net social sentiment or good technical flow. And it's just a way for them to kind of like enhance a strategy of things they already like, right? These are pre-vetted stocks that they'd be buying anyway. It's just a question of like how you allocate that in a given month. That's one of our really successful use cases. Another way that a lot of people use it is net option sentiment for entries or exits. Like I would say, especially for exits, like if you get like 10 points off a high in net option sentiment, or if you enter and you see it go down like about 20% from where you entered, we've seen a lot of success with people like, paring down their position or exiting and a very similar thing, if you can add more, if you see that signal specifically going up. And we actually just have people use it for SPY or QQQ net option sentiment. So basically, like, even if they just trade those, like the directionality can be really important. Like even today, for example, SPY net option sentiment opened up at 8 and went down to 1 before it really started to go down. Obviously, a news event flipped that. But, a day trader trading SPY could have seen even that small move from 8 to 1 today and made some money before that news announcement. I was like live on one of the trading spaces today. And basically, again, this is really how it's useful. Like the technical traders basically said, oh, they're starting to see some weakness in SPY. Yep. And I threw in that I was like, oh, and that option sentiment is down. It's just a different data point that can add confluence and help really de-risk your trades. Or on the other side, again, if you're going back to investing, one of the things that we do very successfully is just manage our longs and shorts based on where SPY and QQQ net option sentiment are. And it could be as simple as like both of them are very low and we just have more shorts than longs. Or even recently, we've seen SPY net option sentiment lower and QQQ net option sentiment very high. Like one of them at 10 and one of them at 60, right? And 40 is about the bull level and 30 is the bear level for, both of those we say. So one is very bullish and one is, very bearish. But, we were pretty well hedged with SPY names, non-tech basically. And then we were long a lot of higher growth, high risk tech. And we did very well with that. And it just really helps, using those to, manage your portfolio. Or if shorting, buying puts are, out of your scope, something that's very helpful is, inverse ETFs. For our paid users, we always recommend a hedge. And for a long time, it was SQQQ. And we said, hey, we recommend this much of your portfolio to be in SQQQ based on what we're seeing in SPY and QQQ net option sentiment. But, this year we switched to SCC, which is inverse consumer discretionary, because we're basically like, look, if the market is going to have any problems with tariffs, which is the only problem we really see, you're going to be happy that you own SCC, and that can really balance out your risk, especially if you're buying more SCC as you see SPY or QQQ net option sentiment goes down. So those are all, I would say, the kind of like most frequent ways people use it. But we've heard like, tons of different ways that people use the product.
No, that is very, very cool. And I'd seen that Prospero was named the best AI fintech startup in USA 2025 by the Global Financial Market Review. That is pretty cool. I just found that out. What kind of stuff goes into that? How was the competition for that? Was it a competition? Like, how does that kind of thing work? And has that made any kind of contributing factors to getting Prospero any kind of cool recognition or opportunities, or opening any doors or anything like that?
It coincided with some bigger marketing campaigns that we're running. So, I do think it, helps, when we talk about it to get that kind of recognition. We didn't apply for it. We just, we got notified we were nominated by someone and then we won. But yeah, I think there's more of that to come, right? I think we spent a lot of time, like we've been around for a while, but we spent a lot of time focusing on, quality control and relationships. The first 3 years, we've been around for 6 years. The first 3 years, I was pretty much the only user of the product. And my theory was, unless I can use it at a really high hit rate, why would someone with far less experience than me be able to do that? So I think that philosophy really helped. And then, when you talk about, Wolf or Jordan or someone like Corey Arnold, some of the influencers that we work with, they've been using the product for 2 years before we even started to decide that we wanted to get the word out about it more. So it's just like when someone talks to them, it's not just like, hey, I found this app that it's cool. It's like, no, I've been using this for 2 years. Like I see that it works. we use it in different ways. Like actually, like I really like in Corey's case, especially, it's actually turned her into more of a trader. She was like a strictly buy and hold person, but she saw so many opportunities in it and she was using it often that she actually became more of a trader, which is a really, really cool story. But I think we've been really focused on getting that, really stable, consistent grounding, because I use a lot of the products that help me, get ideas and everything like that. And one of the biggest problems I see all the time is kind of like a few bad months, which everybody's going to have, like, negative talk, like overpowering, like, I don't know, I don't want to call them out specifically, but I just I see it all the time with Moby, right? Where I think they had a lot of growth, but like anytime I see an ad of theirs, there's people being like, oh, like I forget what it was. It was like some bad like stock of the year that they had last year. And like every ad they have, like it's people like following them around and doing that. And I feel like, managing your reputation, making sure you're creating a lot of success for your users before you kind of like expand the conversation is important. So I think there'll be more of that to come. Like we have been around for a while, but we haven't necessarily been trying to get the word out about us until, quite recently.
But that's very cool. That's cool to hear. And awesome to hear that the momentum's rolling through as soon as you guys started to, get the word out there. And for sure. So I'm actually curious if you have any thoughts on like, if you have a stance at all on AI regulation in the finance world, what's needed, what kind of things you'd like to see more of, anything you guys are planning to build over the horizon at the company that seems cool to you or that you want to dive into?
Yeah, actually those first two things, like before kind of expanding that, I think that those two first questions are pretty linked. Like we're working on a generative AI system, like a lot of other people, but like we've been with everything else, we've been really careful about it. And like one of the things I think there really needs to be regulation, especially around finance things, is making sure you're putting safe information in the hands of the right people, right? One of the things that I stress tested that we're working on for ours is whenever I test a system, the first question I'll ask it is like, what options contract should I buy, right? And there's varying bad degrees, right? Because the truth is like no system should be handing out options contracts until it knows, who's on the other side and if they'll actually be able to, handle that. And I think that's a really funny thing that I've seen in the market when everybody is just like, sometimes retail investors are like, oh, this or that law is being broken. But actually the biggest law I see being broken is retail investors are supposed to be vetted for options. Back in the day when I first started trading, there was a bunch of questions I had to get asked before I could trade options. And people are supposed to get asked those questions legally, but people have figured out like, ways around that. So I think that like that is the big thing that I'd like to see, regulated with AI. And overall, I think we really need to bring back the idea that, hey, I think anybody should be allowed to trade options, but they should be able to answer basic questions about how the options work before they're allowed to do that. And before they're allowed to just get like, random, answers from generative AI systems. So I think that's important. And that's one of the things that we're working on where it's like, we want to tackle that problem before we start just handing people information. We actually want to ask them questions and make sure that if they don't know something, they learn it before we give them certain answers. And I think that that's super important. So, that's one of the things we're working on. We're working on like an alerts product that's going to kind of be an extension of some of the things that we do. That's going to give like our best idea every day. We got like a web app on the horizon. Starting to talk to some people about having an ETF. That's probably more of like a 2027 thing. But yeah, I think it's the same thing in finance as with a lot of AI, right? We've got to do more to make sure A, it's telling the truth, right? I think that's important. And then B, there's some guardrails making sure that people are getting the right information. Like like they have no problem making sure it doesn't like curse or give like obscene information or, you know, whatever, which is good, by the way. But it would be just as easy to make sure that, like what I'm saying, like you weren't giving information that was too mature in terms of like, you know, someone could lose money. That's like, I think just as bad, if not worse, as someone seeing an obscene image. I think you can get past seeing an obscene image probably a little easier, or a chat GPT cursing than losing a bunch of money, you know? So it should be treated seriously.
I see. Yeah. That totally makes sense. Yeah. Wow. I hadn't really thought about that. Do you, I was going to ask, you know, we've got half the crew here is coming over from the cryptoverse. And there are some of the stocks that people pay attention to, like some of the Bitcoin miners, as well as like MSTR. There's even in Japan, you know, Metaplanet comes out and starts buying Bitcoin, adding it to their treasury. Japan's stock market really like that, I guess. People started to buy Metaplanet stock. People really started to get excited about it. And then companies started to say, okay, well, if that's going to work, we're going to start buying Ethereum and adding Ethereum to our crypto stack or whatever that means or something. And then there were 2 or 3 companies did that. And I was like, what? It's like, why? Like, I mean, I get the Bitcoin one because if you're bullish on the Bitcoin asset, then you're bullish on that going up. That makes sense. You figure out a way to, you know, sell off some debt like MicroStrategy. You're able to buy more Bitcoin and you raise the value for everybody. Okay, I can understand that. But that's been wild seeing that and seeing MSTR take off. But I'm curious if you have any thoughts on the crypto world having and like the impact and the cross we've seen with the traditional finance markets.
Yeah, to me, what some of this shows is just how powerful retail is becoming in the market, whether it's, you know, sentiment or actual dollars coming in. I mean, I think it hit 25% last week in terms of volume of retail trades, which is absolutely incredible. Like for a while, it was like at 15 and just started touching 20 and then bam, 25. So I think that's a really important trend. And I say that when I look at something like GameStop rallying because they say they're going to buy Bitcoin, right? Because I look at that, you know, I'm a trained value investor, and there's some things that I think are really important to look at in that respect. And you look at something like that and you say like, shit, like they don't have any better ideas to like enhance or expand their core business to put the cash on hand. Their best idea is like buying Bitcoin and like a fraction of what like a place like MSTR owns. Like that to me is nuts, right? Like GameStop, there's other stuff going on there, but like it did move purely based on that Bitcoin. So, you know, we don't have to talk about that other stuff. It moved and I don't think anything should move, you know, based on basically an admission that you don't have ideas to expand your core business. That's why you should really be buying stocks. But like I'm saying, Wall Street does tend to have that mindset. So the fact that it moved so much meant that there was like a retail bump as well as, you know, the institutional follow on. I think that's the other interesting part about this, like how much power retail buying and the perception around retail buying has started to be on this market. Like I even think in this most recent rally, we're seeing just how much and how important that retail buying is. Because we're like, you look at something like CoreWeave, right? CoreWeave isn't supposed to be profitable until 2027, right? And you look at it going like NVIDIA has been doing well, CoreWeave has been doing better. And it's like NVIDIA is a huge bargain relative to CoreWeave, not to mention it owns 7% of CoreWeave. So it's like, why is CoreWeave moving at such an accelerated pace relative? Like the value story isn't there, but the retail momentum story is, and the institutions piling on to that. And I think, you know, same thing with a stock like Palantir, right? I love, like Palantir has been one of the stocks we've bought the most, right? Because I actually, unlike a lot of traditional investors, like very much accept and try to like profit off of the idea that I think momentum is becoming more and more important versus value. But at the same time, like you look at where Palantir is trading, and that's like proof that traditional valuation metrics are kind of going out the window. And I think that, for all that gets made of like, institutions having a lot of power, and they do, I do think it's cool to see that power shifting. The one thing that I would like to see retail do more, though, is be doing more of the like buying NVIDIA instead of CoreWeave, right? CoreWeave was a nice little story. But NVIDIA is a name that a lot of people can get behind too. That's just at a better value. And you're going to see a better long-term return for more people in NVIDIA than CoreWeave, because the thing about those momentum stocks is institutions, they have better circuit breakers. They know how to time those investments well. They know how to push it down when it started to reach its top, where a lot of retail investors lose out on that. So I think it's great that retail has more power. I would love to see retail use that power in less risky ways, get out of these things earlier and into more, value and momentum stocks, not just momentum.
Yeah, and I think I cut out there a little bit. I'm not sure what's going on with my connection. Cut most of that, and yeah, I think you're probably right there. Like I have, it's I never know how to think about it, because I came from the crypto world first, found myself more interested in the traditional finance world, overall, and became less degenerate over time. Found my way from NFTs and the bottom barrels of crypto. I found myself in Bitcoin, which is like the most boring people in crypto, I would say. They're just all like just buy Bitcoin, hold, like they're the boring old folk is what a lot of people call them. And I'm kind of more like that. And in the stock world, it's been really interesting to watch, because you see this crypto industry creep up, and you see these just crazy growth stocks, these tech stocks, and people getting excited. You see the S&P 500, but you see most of the attention is on those Magnificent Seven, and most of the conversations are around Tesla. They want to hear what Elon said, and they want to hear how that affected this company and whatnot. And it really is becoming just so focused on these central figures and CEOs and stuff like that. And it does get me thinking, like, is it crypto people separately, and then there's traditional finance stock investors separately? Or is it like how you were saying a second ago, we're starting to see just like a mentality shift in investors overall, because we're seeing it in crypto already, just with all the different coins that have launched. And then with traditional finance in the stock world, we're seeing so much movement just in very specific stocks. And we're at a point where a lot of stocks are saying, look, nothing we do is affecting the stock price. And like, we don't have any other options here. If we want to raise the valuation of this company, we got to do something else. We'll buy this asset that's growing faster than anything else that's working. Maybe this will work. And that's a relatively risky-ish like plan, because I am a big believer in Bitcoin, and I think it could and has the capacity to, I think, go to pretty ridiculous price points. But I don't have an exact timeline on that, and I'd be so hesitant to stake my company on that. So I still don't know what to think. I'm so in the middle on the MicroStrategy plan. They've got such a head start; it's different. But for the company starting in 2025, I'm like, so risky for me. I'm so nervous. So we'll see how it plays out.
Yeah, I think that in talking about like this momentum thing, and I think like one of the things that's shifting it is the extent that algorithmic trading has entered the market. As like stuffy as a lot of Wall Street people can be, I think not enough people realize that it's like not really those stuffy people running the market anymore, right? If these algorithms are seeing things run, right, because retail's doing, it's going to create a follow-on. And there's nobody like even running a lot of these massive firms that are going to get in the way of that. They're just letting the computers take over at this point. But I think you've touched on an interesting thing where it's just like, in a market of momentum, right? Some of how you spend your money is around perception, and perception always mattered. And you see, like, part of why NVIDIA is the most valuable company in the world is Jensen Huang, right? He manages the story as well as anyone. And like, that's true of a lot of the most important, like, it's about the perception. But there
Oops. I maybe just lost connection with George. Make sure it's not my connection. Oh, I see him.
Yeah, no idea what happened there.
All good. All good. You're saying Jensen Wong managing the story?
No, I was saying Jensen Wong, and like, managing the story, like building a legend around you is important for any company, and like the perception around you is going to be part of the value, right? But I think what we're seeing with MSTR, and I'll give another parallel in a second, is like, it's not just about the value of the assets they hold. It's the perception that they're the expert in this field, right? And they're going to know when to add more. They're going to know the right times, right? So you have people paying multiples for that. And that's just, you're not going to have the same multiples as people just like buying it in the treasury stock, even if it's adding the value. And there is that difference between like value and momentum, and then also the perception around those two things. And there's another recent example that I'm finding very interesting. And that's what Meta's doing, buying all these AI people, right? Mm-hmm. Like looking at what they're spending, like the ROI on that, you're probably talking about like a 5 or 10 year tail, if they even reach that, because there's an argument to be made that maybe they won't catch OpenAI, maybe they won't catch Google, which just had a huge AI start, although they've been pretty disappointing. But I'm just saying, like, that's where the ROI is. But the other side to that is like AI is such a thing, right? And them scoring all of these like big victories on talent that they're going to talk about, they're going to hype up what they're building. I actually think there's value in that perception. There's momentum in that. So it's just like they're just writing those huge checks, and they probably feel very good about it. Like Meta is one of our favorite stocks in Prospero. It has been for a while. Like historically, we got in when it was at 170, and our upside was like solid at 100 out of 100 for like 2 years. So, we were very early on that train. And it's still one of the favorite stocks in our system. And I think that's the classic example of perception changing. Like when we first got in, pretty much everybody hated Zuckerberg, and they weren't wrong for that, because he basically just like pissed away a bunch of money on the metaverse, right? Yeah. And like anyone and their mother that like knows how to be a good public company CEO knows that you don't spend a bunch of money on frontier tech like that, right? Especially them who, acquired Instagram, acquired WhatsApp, that they should have felt very comfortable in being like, look, instead of spending like billions of dollars on our own and getting egg on our face, why don't we just wait to see when one of these metaverse companies does well, and we'll buy it just as we have in the past, right? That's did true. Make him look bad, right? And the perception around him was that he didn't spend money wisely, right? But then you see everything that they're doing. They're making interesting hardware plays, right? They've done really well in open source with PyTorch, Llama. They're making tons of good decisions, right? So all of a sudden, he starts spending a lot of money again. And that perception change really matters if the market is responding well to it.
Wow. Okay, that is fascinating. Yeah, I had not really thought about the perspective of Mark Zuckerberg from the stock investor and the shareholder perspective. I'd always thought about it from the crypto point of view and been like, man, what a dud! Like, God, guy just like all this noise and nothing happened. I was like, what a noob. That's actually really interesting to think about. Wow.
A lot of people on Wall Street made money on that difference in perception, right? And people have caught up largely now, but there was a lot of money to be made for years, when basically he started making smart decisions. And everybody just continued to view him as an idiot. I mean, we have like a whole case study on this, but the funny thing is like, I actually first saw it at 100 upside when it was closer to $100. And I looked at it and I was like, well, it might be doing well in Prospero, but Prospero doesn't know that Zuckerberg's an idiot, was basically like my first response. But it just kind of hung out there. And I was like, well, maybe I'm the idiot. Like I built this to basically give me some objective truth on what's going on in the options markets. Here it is, just like sitting at the top. And I'm just like, and I watched this go from 100 to 170, thinking that I'm smarter than this software I built to be smarter than me. So always, the market can always humble you. But the important thing is in any of that stuff to just be very quick to reevaluate that you're wrong. I would say that that's the most important way to make money. And I actually often see it in reverse, where people just buy something and they love it and they fall in love with the stock, and they're never willing to reevaluate whether the story might have changed, their thesis might have changed. But like the best investors, traders are looking at the opposite. They're looking at their stuff and they're saying, you know, am I wrong today? Let me reevaluate this. Has things changed enough that I might now be wrong? And that is just a huge difference between, I think, the best people and the rookies.
Yeah. Wow. That makes sense. And that's very cool. Does anything else? I know you mentioned the Meta story, which is really cool. I'm sure you made some money, and I'm sure a lot of people made some good money during that time. Are any other success stories sticking out to you of different things that you found via the platform? You were like, oh, that was a good thing to know. That made me some money. That was a good thing to pick up that I was not going to find on my own.
There's tons of fun ones, like the Wolf bankruptcy. By the time it got filed, it was 17% of our investing portfolio and 11% of our trading portfolio. And those metrics were just tanking. Like we basically knew that it was going to file for bankruptcy before it happened. Like we produced a momentum score in our trading letter. And the day before the bankruptcy, Wolf had a 9 and the next highest score was a 20. And the lowest I'd ever seen before that was like a 14 or a 15. So our signals were like screaming that way. Then probably my favorite of all time, but less recent. We got into Alibaba twice in 23 and in 22 and 23 before major news events, before they announced like a major ant financing and before they announced their reorg. And it was just because like we were seeing lower volatile signals. And then like two of our most important ones, upside net option sentiment, shot up to above 90, both of them. And this happened twice within a 3-month span. And then actually AppLovin is another one of my favorites. Similar things, shot up to 90 both times. The stock was still trading at 112 when it first got on our radar. And similarly to Meta, like when I first saw AppLovin, my first response was, what a stupid company name. I was like, this must be a dumb company. But I saw it and I kept watching it and I was like, okay, like maybe this has got a dumb name, but I should look into this a little more because it kept on popping up on our screeners. And like the cool thing about that case study is we actually saw it go up each time to higher highs of net option sentiment before it happened. So a lot of times we could 2x, 3x our position around that. So yeah, I mean, sometimes we just use these signals and they make it very easy for us.
Yeah, that is the coolest thing. I mean, you're right. Like you like you said, you're like, I made this thing to give me alerts and to alert me when it's going to find something that I'm not going to find on my own. And to see using that, it's got to be a pretty cool feeling that you and the team put that together. I was going to say, I know we're kind of coming up on time, but is there anyone you wanted to shout out on the team? I know you got a pretty extensive team, a bunch of people helping you out. You got some advisors and stuff like that. It's pretty hard and difficult to build in a world where attention is like the name of the game. Apparently attention is the only thing that matters.
Yeah, I mean, I would say there's too many people to thank. I mean, one of the person that I always have to thank is my co-founder, Adam Plant. He's the CTO, and he is just like he helps me like every day. And we've bootstrapped. He actually still has another job. He's got 2 young kids too, and he always makes time to do Prospero stuff. But then there's tons of other people. But if I got to shout out one person, it's him. Oh, I guess I'm all alone now. But yeah.
Sorry about that, George. I have
we've been taking turns. I
don't know what's
room. Maybe the room's to blame.
Yeah, maybe it's X. Like I don't know. it's for sure neither one of our faults. We'll pin this one on Elon, like Tesla. And I'm kidding. I'm not sure what is happening over here in connection land for tech, but I don't know where I kind of left off, but didn't know if you wanted to shout anybody out. I know it's difficult to build into 2025. We came together in Wolf like a year ago, started to build the team more, and it's a difficult ride. You're working with. Oh, George, let me know if you can hear me.
Yeah, you were breaking up a little bit.
Okay.
But yeah, no, I did. As you were breaking up, I did thank a few people, but also very thankful to be working with the Wolf team. You guys are all great. Look forward to continuing to do this and getting the word about Prospero. I think we'll have a lot more people. I mean, already in the last 3 months, our app was from about 5,000 monthly actives to over 12,000 monthly actives. So we're seeing some real growth. More people are using it, getting benefits from it, and that's exciting.
Dude, that's amazing. And yeah, for sure. And anyone who's watching on X, if you haven't already, be sure to give Prospero a follow right above our faces. You can give them a follow. They're tagged. And if you are on YouTube, go to the description down below and you can give them a follow as well. And check out all the things we've got to offer. We're going to pin a post down below the stream. So if you want to find out more information, definitely be sure to click that pinned, or be sure to click that comment down below under the stream. You can find out more information there, and hopefully we'll hear more from George soon. George, thanks so much for coming on. Sorry for the difficulties on tag. I'm not sure what's going on here, but I really had a great time chatting with you, and it was cool to learn a couple of new things, coming from the stock world of things. I'm coming from the crypto side, so it was cool.
Thanks for having me. It was great. I don't think the connection problems were that bad either.
Right on, man. We'll have an amazing day. And everyone who's watching back at home, please retweet the stream, give Prospero a follow. We'll catch you guys all in the next one. Take care, everybody. We'll see you guys.